So I think it'd be useful just to start, and we'll go quickly along the line, each person saying what their company's investment strategy is, what type of assets, whether it's buying or selling. Would you like to start, please? Oh, perhaps ought to just introduce. I perhaps just ought to introduce Miguel Santana of Fidelidade Property, which is part of the Fidelidade Insurance Group.
Exactly.
Jonathan Willen, CEO of Europe Property Group. Samira Kolhatka, more or less right, Vice President of Blackbrook Capital, and Rui Vacas I've had a few changes on the panel here, so my notes aren't very good. I'm sorry.
I'm
Rui
not suffering.
Vacas
I'm not
of
Newt.
Newt. Sorry.
Okay, thank you. Very pleased to be here with all of you. I'm not seeing you because of the light, so it's good. I don't see your faces. Very good. But just to start and to see how old I am, because I'm becoming older, when I start my relation with real estate was as just a buyer. I was engineer working in engineering at that time, and my interest rate at that time was 18%. And I bought it, and I'm here, thank you, I'm here, and it was 18%. So I think the world is very resilient, and we know, and since the last 20 years, we faced very strong events, unimaginable, not predicted by anyone, any economic study or any consultant firm companies. So here we are. So Fidelidade, as an investor, we are an insurance company. So of course we have to take care of our investments very carefully, because it's our clients' money. It's our clients' savings and sometimes their future and our responsibilities. So we have a principle in Fidelidade that is the PPP, the prudent person principle, that we always have to have in our scope. So we are continuing our investments, not only in Portugal as an international investment, but here we are mostly dedicated to Portugal. I would say, as part of you know, we are doing a huge development in Lisbon, in Intercampus, the Intercampus project. So we are very positive, even with all the things that has been said and what the former Minister Pedro mentioned. I'm also very positive. So okay, we have a problem, but we will overcome it. So we are keeping our strategy, of course, trying to have some long income producing assets, because it's real estate, and we think we have that good asset type, the core buildings to invest. So we are keeping, but Intercampus, we are very positive, and we think that we have a huge project in a prime location. We will have prime offices, high-end, top residential, and a different and challenging retail solution for the city.
Pleasure to be here. I'm Jonathan Willand, and I set up and run a group called Europe Property Group. We've got founded in 2019 and have invested across Europe since, in offices, logistics, residential, across the capital structure, but also doing both public and private real estate. In Portugal, we've been particularly active in logistics, but also in some mixed-use assets and offices, working closely with our partners here, who've been Bedrock and REA. And happy to be on this panel and share some insights about what we've been doing.
Thank you.
Hi everyone, happy to be here. I'm Samira. I'm Vice President at Blackbrook Capital. We are a specialist supply chain infrastructure investor, which I'll get into what that means more in a second. But we were started 2 years ago, based in London, and today we have 1 billion in assets under management across 7 countries, including Portugal.
Well, it's my time. I'm not Severin. I'm here because Severin is A6, so I'm replacing Hash. Most of you know me already for a long time. My name is Rui. I'm a real estate director of Nude. Nude is a recent company that was created 2 years ago born from the group Auchan, the real estate area of Auchan Group. So new today represent a lot of investors, internal and external investors. It's more focalized on retail, pure retail, but is growing through other areas. And taking the chance of Mr. Vieira said some minutes ago, what investors are looking for, and we are seeing that all the investors, or majority investors, are looking for new typology of housing. And that means everything from student housing, from co-living, other ways of living that today can give the answers to the lack of housing that we are facing in Portugal. And we are working also with municipalities, because municipalities has also an option to create with the investor the affordable houses that can put on the market in lower price. But we are, as Paulo said some minutes ago, we are facing also some problems that the government can help us, can help investors with all the tax issues that we are facing, for instance, for BTR issue that can solve the problem of lack of houses, because we don't have housings. And more than that, our population don't have the saving enough to start the credit to buy their first house. We made a recent study in Portugal, and with the average of our salary, we need at least between 5 and 10 years of savings to start to buy the first house in the market.
Okay. I'd like to fire an international question, perhaps at Samira and Jonathan. How does do your investors rate Portugal, strengths and weaknesses, when it comes to choosing between investing in Portugal and other countries? Samira, would you like to go first?
Yeah, sure. I mean, look, we're a pan-European investor, and I think that us compared to other pan-European investors, perhaps what differentiates us is that we truly will look at every market in Europe and not just the really big, really deep markets like a Germany, France. We've seen very interesting opportunities in Portugal historically, and we continue to see more, and we would like to see even more. You know, investing cross-border is always challenging and not without its difficulties, but we've always found investing in Portugal to be very, very transparent, very efficient, very easy. So we like that a lot. I think, you know, in terms of, not a downside, but one thing is that we just wish we saw more supply, I think, particularly within logistics and particularly within, you know, grade A logistics. That's something we would love to do more of.
Jonathan.
And that's a good segue, because that's actually where we've been the most active. But I think across Europe, and we've invested in from Poland to Spain, Portugal, UK, Germany. We've looked at a few things in the Nordics. Our experience in Portugal has been overwhelmingly positive. It's a market with very strong fundamentals. I think that the market is sound. It's easy to transact. If you have to be critical, I'd say it's a slightly smaller market, which in times of market distress can be less liquid. But you do get compensated a little bit for that with higher yields and in particularly strong occupational markets in logistics, where we've seen really good operational performance. So we've had a really good experience, but it's been about really, being creative to try and find the right opportunities in a smaller market.
And you work with partners, I think I heard you saying.
Yes.
So we exclusively work with partners?
We always work with local operating partners in our different markets, similar to most international funds. And I think that's key for us. It's about partner selection as much as it is about finding the right investment theme and finding the right assets. So that's been a big driver of our success. And
you find those partners of sufficient quality, governance issues in Portugal?
Yes, absolutely. And I mean, I would say in Portugal, so we've been working closely with Bedrock, who are also here, and REA, and that's been a fantastic partnership, which we're really looking to build upon. Overwhelmingly positive experience.
Very good. Must be music to your ears, Ruin, Miguel, and...
Well, I think we said everything already. And,
so we can finish early, can we?
With the pitch of Pedro, we heard about safety. So Portugal is a very safety country. Besides the hills that give or can give more profitability to our investors, and that is the way we have to attract the money for Portugal. And do not forget what Pedro said, because I had it in my pitch. The renewables energy is also, it's much more than a trend. It's something that exists already, and we have a lot of investors that want to enter in Portugal to invest in solar energy, to produce more and more. Because we are a south country, we have a lot of sun. It's Portugal, Spain, and Italy are the best countries to invest on this area.
And you don't have to presumably compete for capital as such in your company. You have to have a business plan to invest resources as...
So we have both. We have internal funds,
right.
And then we work with external investors that we may present our projects to co-invest with them.
Okay. Miguel, I'd like to change direction slightly. Resistance of investors and occupiers post-COVID. We talked about challenges, and clearly there are significant challenges ahead.
Yes.
Do you think we're better as a community, better placed to face those challenges now than pre-COVID?
Yes, I think so. So COVID was really a challenge for the occupiers. At the beginning, we had some opinions and some trends saying that, oh my God, offices are not needed anymore, and this is a nightmare for us as investors in real estate. But it has been changing. So what we're seeing is that the trends are changing, starting from US, let's say, to Europe. So what we know is that we will have for sure an hybrid model where people will stay at homes 1 or 2 days, and perhaps, and the rest they will come to the office. Of course, Portugal is now, we know, is attracting a lot of foreign people to work here, because our country, our weather, all those good things that we have in the life, not in the business life, but in the private life, are very good. So I think we have that challenge. But right now, what we're feeling is, in terms of occupiers, is that they are adjusting their offices' needs. Office will always be a reality. That is my opinion. So, but I think it's being followed by a lot of occupiers. So we are adjusting. We are analyzing even the projects that we are developing. We are adjusting them to those needs. But I think the disgrace that was announced, like Rubini, in the economics, is now history. It's past history. So I think Portugal will have an important role on that. And Fidelidade and Fidelidade Property, with its new development in Lisbon, we are totally confident that we will answer to those new needs after the COVID.
Okay. So sometimes I hear people saying the pool of occupiers in Portugal is limited, and that adds risk to any investment. I don't know whether Jonathan or Severa, you have a view on that?
A smaller universe of occupiers?
Yeah.
I think historically that's probably been the case, but I think it's quickly changing. If you're looking now at the office universe, both in Lisbon and Porto, I think there's an increasing number of international tenants and companies relocating. There's been a huge inflow of US and Canadian companies into Portugal. Within Europe, I think everyone's now realizing that there's great access to talent. There's a very, very good workforce. And so for a number of service-oriented companies, creative media, tech, TMT, it's actually a very attractive place both to employ and be employed. So I think it's changing quickly.
Yeah, and I'll just add to that, on the logistics side, I think there are a lot of very many blue chip occupiers within Portugal that, we would love to have as our tenants and would love to do sale leaseback or anything like that with. On the convenience retail side as well, lots of obviously globally known grocery retail companies that similarly we would very much like to have as our tenants.
We see on the boards over there, 33% of investment in Portugal was in logistics. Is it too late to invest in logistics?
Not in my view, not in BlackBrook's view. I think we still very much believe in the fundamentals of logistics. that's for a couple of reasons. So I mentioned before that we are a supply chain infrastructure investor, and what that means to us is that we want to invest in assets from the point of production. So, light manufacturing, heavy industrial, all of that, through distribution to logistics assets, and then over to the point of sale, which to us, convenience retail is a great example of that. And we still like logistics, particularly within that category, for a few reasons. I think one is e-commerce penetration. I don't think e-commerce penetration is going to stop. Maybe it's slowed down a little bit since 2020, 2021, but it's certainly not letting up anytime soon. And the more e-commerce penetration you have, the more distribution centers you need. That's one. Two, I think the supply-demand imbalance throughout Europe, and particularly within Portugal, for demand versus high-quality logistics assets is, there's a huge imbalance there, and equally that's not something that's going away anytime soon. Going back to ESG, I think, ESG, as it should be and as we believe it should be, it's becoming more and more of an important topic in the EU. And as a result, many European countries are limiting the levels of logistics zoning that they're putting in place. I think what that does is that limits supply of logistics even further. So, I mean, I agree, that there's been a boom in logistics over the past 2 years, but I don't think it's anywhere close to too late.
Jonathan, you'll still invest in logistics?
Absolutely. And if anybody's selling, we'd love to keep investing. But I would say from a European perspective, I mean, we did a really interesting exercise 12 to 18 months ago, looked at all of Europe, and we had exactly the same question in mind to our investors. Is it too late to achieve value-add returns in the logistics space? It's very crowded, it's very competitive. Most markets are quite mature. And if you look at Portugal compared to the rest of Europe, you're seeing clear trends lagging, so e-commerce penetration, some of the things you mentioned. You're seeing very strong occupational markets, but rents are typically lower, yields are typically higher, and up until now, you've been able to finance very attractively, and I think for a little while longer. So if you can achieve all those parameters, it's still a very attractive investment thesis and good fundamentals.
In the sort of 5 minutes I spent in the lobby of the hotel talking to a few of you before, one of the things that came up was clearly deals are stalling, renegotiating of pricing of deals is going on, which could itself provide some opportunities. Eric himself talked about expecting some increase in, I think it was office yields. I'm not sure you said anything on logistics yields, but he didn't really quantify that. Do you have a view on where yields are going and whether that could actually be more positive in terms of the capital you still got to expend, Miguel?
Well, that message that all the deals are being readjusted in price, it's something that is dangerous, When I'm in the seller side, I don't like that type of speech, as you can guess. When
it's
I'm
dangerous to talk about it, or it's dangerous it's happening,
well,
or both?
Well, we are living that crisis, of course. Of course, we know not only the deals are being adjusted and there is price adjustments. We know they are happening. Even the evaluations are reflecting the market. But we are facing that. We are facing that, and of course, for acquisitions, we find it as an opportunity. So we are doing both roles, buying and selling, of course, with different positions. But ourselves, Fidelidade, we are not depending on loans, so it's easier for us to manage our own investments, which is, for us, it's opportunity. So we are in both sides, okay, buying and selling, and good opportunities are in the market. I always was also, we are not investing on logistics, but I always was a true lover of that business because, and following Pedro's words, with the globalization that we have, in Portugal we have to increase. Just a small note, last week I was in Paris and there were some figures, I don't know my memory, but the number of facilities for logistics per million of inhabitants that when we compare with US or with Europe, it's hugely different. And if we come to Iberia, it's a nightmare, a disgrace. So there is room for that also.
Rui, do you have a...
Invest in logistics so far, so I'm just following the conversation. But we just assist our tenants that are using more and more the storage to make their own logistic or deliver. We may see Zara that is increasing their store to accommodate more space for storage and to deliver. We can see also Auchan doing the same with their storage to the drive-in, because they think, in fact it is, it's less expensive for them and more profitable for them to deliver in stores than using a huge supply chain logistic to deliver in-house of the people. So they are changing a bit also and using their own space to deliver the things.
So you're finding the pressure from tenants and probably investors to work, to sweat their investments, whether it's as an occupier or an investor, are producing lots of opportunities to reconfigure buildings, come up with innovative ideas.
In fact, I don't want to open the discussion, because one thing is the pure retail, I mean hypermarkets, they are owner of their own space, but when we're talking about tenants, they are not owner of their space. They use our space, and then they come with sales, lower sales, but they are using space for other things than sales. So it's a discussion that is much complicated to enter in detail now.
I think, Miguel, you mentioned buying, selling, keeping, particularly the three of you. How are you going to be net buyers or net sellers or standing still over 2023? Miguel first.
Well, as I mentioned, and I might be repeating myself, we are in both sides, and we will be in the both sides, okay? Because we have a portfolio, a real estate portfolio to manage, not only here in Portugal, but also international. So the type of assets that we have a business plan that assumes buy and sell. So we will keep doing that, and we are defining, right now, we are defining our 2023 budget, me and probably many of you, we are working on those figures, and we have both scenarios in the table.
But that's unusual for an insurance company to be so active as a trader. Normally they're longer term plays, no?
Yes, but we've been very successful in the past years, and the experience is good. We are keeping our good incoming assets as one of our, of course, a strong position in our portfolio in terms of number of assets that we have on those, but keeping that strategy of buying and selling and revolving our capital in new assets and new deals, it's been very positive, and the experience is very good.
Jonathan, your position.
I think for us, we're very cautious generally, just given how quickly the world is changing, and in some regards, it's almost a perfect storm with the energy crisis, inflation, rates, slowing growth, geopolitics. I mean, you can just add to that list.
Yeah.
So what we are adding to the portfolio are really high conviction assets or high conviction themes, and that has happened to be in Portugal over the past 6 months. In other countries, we're seeing a ton of opportunities, but there's still a big gap between vendor expectations and where we think such risks should price. So it's about, I think, to your point, Miguel, it's about recycling capital, once you've stabilized assets and added value, but it's also about acquiring assets that are resilient enough that you have some staying power in the current market, securing capital structure, taking income, and following the cycle.
Yeah. Well, BlackBrook is pretty young, and I think we've amassed 1 billion in assets today, and we would like to continue to grow, and so we are a net buyer. Obviously, it's quite an uncertain market for a variety of reasons, but our view is that can create some quite interesting opportunities. And you can see opportunities where there's mispricing in regards to, the fundamentals of an asset are very strong, but it's priced for whatever reason as a riskier asset. And I think that creates some very interesting opportunities. You know, we've done quite a few deals in 2022 and would very, very much like to continue that in 2023.
Rui, I don't know whether you want to view on that.
No, I will do it. So we are in a moment not to buy, not to sell, sorry. Because if we are thinking about yield increase, it's not the moment to sell our assets, but it's exactly the other way. It's try to find a way to buy cheaper, because the key point is the way to buy and not the way we sell afterwards. So if we buy wrongly, we'll never do a good deal after in the end. So I would say that for us, we are looking for, be patient, and we'll try to find good business for us, for our investors. And after this cycle, well, it's the asset management initiative, so it's asset rotation. So we have to buy in the good moment and sell also in the good moment for the seller and not for the buyer.
We touched in the first session on finance, and I think there's some reasonably negative views in terms of impacts of changing financial situations. Jonathan, do you agree with what you heard earlier, or do you see it as a disaster scenario, or are you heavily leveraged? I don't know how you structure your transaction.
Yeah, no, I think a lot of people get caught out by the current changes in cost of debt in the financing market. We have quite a lowly levered, robust capital structure, and we've hedged our interest rates earlier this year, and we are fine. But I think we're a Swedish company. A lot of it's a very interesting market around the Swedish listed real estate companies, and almost all of them have been caught out by 200-300 basis points higher costs of debt, which has led to complete asset repricing and big discounts to NAV. So alternative sources of financing, I think you need to be quite careful and just make sure that you have this staying power, which is very important in the current market.
And are there really alternative methods of financing, or are we really just living with the traditional ones with a few frills around the edge?
We've taken just traditional bank financing across our portfolio, and we haven't really pushed much higher than 55-60% loan to cost in some cases, but on average we're probably at 50. And then we've added some value through asset management, so loan to value basis, we'd be slightly lower. And then having some cash and some dry powder that can help to offset that if we need to invest in assets. I think with alternative financings and debt funds, we've looked at some opportunities as well, but it hasn't been the right things to proceed with, and we would look at it, but up until now we haven't.
Samira, are you optimistic that perhaps some financial stress will provide more rotations and buying opportunities?
Yeah, certainly. I mean, look, I think the rising interest rate environment and subsequent rise in cost of capital definitely creates challenges across Europe, and certainly creates challenges for us, who are no exception. As our cost of capital rises, if an asset is priced at 4%, but our cost of capital is 4.5%, it's kind of a problem. And I think this is an interesting time in the market because buyers and sellers don't always agree on what the price should be. But that being said, I think this uncertain market also creates, opportunities for sure. And we've seen it to date. And from a perspective of capitalization and funding, we very much have a lot of capital to deploy. So we're not concerned on that end, and we will continue to acquire assets.
We've been eating into your coffee break, or drinking into your coffee break, I'm afraid. But I had to give this panel an opportunity to have a reasonably wide-ranging debate. Is anyone more interested in coffee or wanting to ask a question? I see Paolo's got his hand up. Paolo, do you want to go? Just don't ask Miguel the question, otherwise.
It's for Miguel.
It's for Miguel.
This is the second reason for me to be killed. I'm preventing people to have coffee. Miguel, a third question for you. A couple of years ago, in 2018, me, Eric, and Francisco, we said that the take-up was on the way to be 300,000 square meters of offices in Lisbon, and the prime rent 30 euros per square meter. Nowadays, in Zone 2, the prime rent is around 23, 24 euros per square meter per month. You have the project in the center of town of Lisbon. How do you leave this momentum, assisting to this take-up, to this increase on prices, and having the project in your hands that is going to reach the 30 euros per square meter per month? The second question is for those that are seated abroad. And my question is, at what extent do you have the feeling that we have on the ground that nowadays when a company considers to move to Europe, in the past they look to Eastern and Western Europe, nowadays they no longer, for the worst reasons, they don't look to the Eastern Europe. They just look to this side of Europe. Do you have this sentiment as well? Thank you.
Okay, I think it is not working, this one. John, please. Okay, I can answer in just one word, smile. Okay, I'm happy. We are happy because we see, of course, the increase of the prime rents, and we know the product that we have, we know the location that we have. So even with the conversations informal conversations that we have with future tenants, everyone is aware of what we have and the potential of increase that we have. So for sure, we will be the prime rent in Lisbon very soon.
Anyone else desperate for a quick question? Go.
Second part.
Pardon me.
I'd say, because we've invested both in Poland and Portugal, and they're quite interesting, and obviously, you know, with Poland and the Ukraine, it's a very precarious and tragic situation. But what happened in Poland recently, actually, on the office occupational side, is you had a lot of Ukrainian talent that's moved to Poland, and you had particularly strong software engineers, technology-trained employees, and so the performance of the occupational market in Poland has still been very strong, both from international and local tenants in our experience, and I think we're seeing the same in Portugal.
Okay. Well, we did have another WooClap question up. I think only one person's voted. Our prices, real estate price in Portugal will go up. That must be Ismail answering. Only one answer. We've got 200 people now connected. There we go. Now we're getting voting through. Interesting split going on here. Yeah. I think there's one thing you can guarantee, they won't remain the same. I think that's a good bet. Well, I think we're going slowly, so I think we'll call it a day on that. And I'd like to thank the panel.